Jonathan, we've had numbers today from the brewer SABMiller, known for its exposure to emerging markets. How's it doing?
It's doing quite well. This is a company that gets about 70% of its revenue from emerging markets, and in those markets the local currency revenue growth has been high single digits, 7%, 9%. At the group level, though, that's been hit hard by the appreciation of the dollar. When those revenues translated back into US dollars, the group's reporting currency, overall group revenue is actually down slightly. That's a better performance actually than most analysts were expecting.
How does that kind of thing affect the group's dividends?
Well, dividends are declared in dollars, but they are paid in the currency of whichever country you reside in. Most of SABMiller's free floats, most of the independent shareholders other than Altria and others who are the majority shareholders, receive dividends in sterling, almost 3/4. So for them this is actually great news. The US dollar dividend is up around 9%. In sterling terms, that's up nearly that will be up nearly 20% based on current exchange rates versus last year's final dividend.
Now, SABMiller often seen as a bid target for AB InBev or potentially a buyer of other beer companies, and certainly there's been an awful lot of consolidation in the beer market in the last 10, 20 years. Do you think any sort of deal is likely?
I would never say never. I don't think SABMiller needs a particularly big transformational deal. They've talked to Heineken, we know, in the not too distant past. Buying Heineken would give them a globally recognised beer brand. They've also been mooted as a bid target for Anheuser-Busch InBev, which would cover their emerging market exposure. Now, this is a market where sort of 4 big brewing groups control about 90% of the market, so there is constant speculation as to whether one of them will pick off one of the others.
Perhaps best to take a beer and watch on. Jonathan, thanks very much.